Good afternoon, everyone. Thank you for joining us for this yet another edition of CFAA webinar. Today's edition promises to be insightful as always. Just so we know, today's webinar is focused on creating and enabling, environment for financial accountability, and we have two seasoned professionals who will be leading us through today's session. I would like to welcome Pastor Godman Akinlabi, the lead pastor of Elevation Church, to lead us in the opening prayer.
Let's share a word of prayer together. Our Heavenly Father, we thank you for the benefits of being called your own. We thank you for everyone on this platform today. Thank you for our facilitators and all participants. We commit ourselves into your hand. And this is about you. This is about your kingdom. And we ask, let your kingdom come. Let your will be done in the midst of us. Make this a wonderful time of learning. And let everything that will be done here today glorify you. As we rub minds in Q&A, Holy Spirit, we ask that you infuse our hearts with the right answers for the questions that will come today. Give us understanding that your house may be in order. You said everything should be done decently and in order. And we submit ourselves to you as agents of order, especially in the financial area of our church administration. We thank you and we ask that you have your way in all that we do and say. In Jesus' precious name, amen.
Amen. Amen. Thank you, Pastor Godman. All right, without much ado, let me welcome our first speaker for today. He's not new to our webinar. He's always been with us and is a member of the team at CFAA. Mr. Yinka Ogunubi is a finance professional with extensive experience in corporate treasury spanning 23 years. An expert in the implementations of treasury management system across Africa. He pioneered the implementation of TMS systems with Nigerian treasury, with Nigerian banks in 2004 and subsequently across Africa until October 2017. He was the head of Treasury Project Support and Training for the CFAO group in the Anglophone countries comprising 8 countries: Nigeria, Ghana, Kenya, Tanzania, Uganda, Malawi, Zambia, and Zimbabwe. He is currently the Group Treasury Manager for CFAO Group in Nigeria and also a member of the Governing Council of the Association of Corporate Treasurers of Nigeria, ACTN. He also sits on the board of several companies within the fintech and service sector. His first book, Honey, Is It in the Budget, and other tools created by him has helped several families gather knowledge required for the optimal management of their personal and family finances. He has also developed tools that help SMEs manage their financial reporting needs. He is happily married to Yewande, a lawyer and development worker, and their marriage is blessed with 2 lovely children. Would you please make welcome today Mr. Yinka Ogunubi. Welcome, Yinka.
Thank you very much. It's a delight for me to be here today, and I'm very happy that I'm not doing this alone. I'm doing it with a highly qualified and decorated professional. This is Margaret Bale, and we're doing this together, and I'm happy that this is a tag team instead of me doing it all alone. So basically what I'm going to be doing is I'm going to be doing an introduction on the subject matter, and she will go into a lot more of the technical nitty-gritty, so just consider what I'm doing as whetting your appetite, and she will go into the deep form of the conversation. Now, if you're with us in September, you will have remembered that we started this webinar talking about financial accountability, and so we gave what you call like a broad scope of the subject. We had barely 30 minutes to talk about that, so there was not enough time to go into the nitty-gritty. So what we're going to be doing today is that we're going to spend a little bit more time going into the fine details of it. And it's important that people pay attention to the things that we say, because they're not just our own personal opinions. They are factual. They are based on the legal requirements, and they're also based on what is professionally expected of FBOs. So if you hear me talk about FBOs, please know that I'm talking about faith-based organizations. So you might hear some of these acronyms being thrown around. If you're not clear about anything, just ask your questions and we will clarify on it. I'm going to be taking two topics really, and there are 5 topics in this series. I'm going to be taking financial accountability and governance, and Mrs. Bale will take the other 3 topics. So if you don't know, Nigeria has, according to Pew Research Center, Nigeria has over 80 million Christians, in this country. That is the largest congregation of Christians in Africa, and you could say the largest congregation of Black Christians, all over the world. So it's a significant number of people committed to a faith, and we need to understand that to whom much is given, much is expected. So when we have this number of Christians gathered in a place, we need to look at what are the requirements, for accountability, for the sheer number of people that we are responsible for. So I believe that a lot of us that are in this seminar, we are in one way or the other Christian leaders, we are pastors, we are church leaders, and we're in a position of authority in one way or the other to take a decision. So what we're doing here is serious. It's not just a question of trying to be politically correct or whatever way you're looking at it, but we're looking at it from the point of view that it's important to be financially responsible to cover for this very large and vast number of people. Now, there's Paul in Philippians 2 verse 15, in the entire chapter actually, was admonishing the Philippians about the need, for them to be responsible, the need for them to be humble, the need for them not to grumble, and a lot of things. But the verse in chapter, the verses of in verse 14 and verse 15, it was very significant, because there it said that there was a need to be blameless and innocent. Okay, children of God without blemish in the world, and shining as the light of the world. Now, what he was trying to communicate, which wasn't just in the book of Philippians also, but we also see the same thing in 2 Corinthians chapter 8, when he was talking about the offerings for the Macedonian church, was that there is a need to be, blameless, not just before God, but before man. So when we talk about accountability is something that we know of as Christians. We are brought up as Christians to be accountable to God. So we know that one day we're going to die and we're going to give account of everything that we've done. We know that we know the story of the 10 talents of the man, the master that came back and asked, the workers to give an account. So the whole, concept of Christianity is built around accountability. So we understand accountability to God. It's not something that we are taught. It's something that we know by virtue of our faith. But Paul didn't just stop there. He went ahead and he said, and he made us understand that we didn't just need to be accountable to God. We need to be accountable and blameless before man. And so the concept of financial accountability, is about being blameless, is about having no guilt, and it's about going the extra mile. So if you're expected to go 1 mile, you know, the expectation for us is to go 2 miles, is to go beyond just what is required to be able to show that truly we are accountable. So what is a financial accountability? In simple terms, it means being accountable for what has been delivered in your hands. So if it is money that has been delivered in your hands, you have to be accountable for it. If it's people that have been delivered in your hands, you have to be accountable for them. If it is assets that have been delivered in your hands, you have to be accountable for it. So since we're talking about financial accountability, we're talking about money and its connections. So anything that has to do with money, whether it is in a current form or in a fixed form or in a non-current form, whichever way it is, if it's linked to money, it's about having to be able to account for what it is used for. So in the slide there, you'll see that I said it is responsibility for the way money is used and the way it is managed. It is also the accurate and complete record of all financial transactions. Now, it's very important to know what I said there. Accurate and complete. All right, accurate and complete. It's not about it's not about a state of, oh, you know what, I'm just reporting what I think I should report. It's about reporting every single thing. Also, we talk about adequate and transparent reporting of results. Accurate and transparent reporting of results. There are some things that in the lifespan of of an entity, you will find out that there are some things that you don't want to report, but financial accountability requires that you do so. I mean, I was in a board meeting once, and it actually was a subcommittee meeting before the main board meeting, and we're looking at the financials of an organization, of a fintech organization, and the financials show that they made a substantial amount of money in terms of revenue, in that particular year. Actually, what happened was that some revenues that they should have booked for previous years didn't come in until that very year, the year of the financial year. So the auditors booked the revenue, and it showed that they made a lot of money. And of course, when they made a lot of money, they are going to have to pay a lot more of taxes. And I saw a reluctance in the management of the organization to accept the fact that they were willing to declare everything that that the report was showing. They wanted to be able to say, that was for previous years. Let's not show it. And I insisted: is it true? Is it accurate? We have to report it, because that's a transparent way of doing things. So in the same vein, the requirements also for non-profit organization is the same. Accountability means that you must report every a single thing. I mean, let me give an example. For instance, if for instance a certain amount of money was used to be able to support, or maybe maybe you have this amount of money in the bank, and then let's say you have a 40 million naira in the bank, and the church used 30 million naira to buy a car for the pastor. Okay, now that's not something that you probably will be happy to show, because it's showing that you're not properly really using or efficiently using the money that you're supposed to use. But financial accountability means you must report it. You must be transparent in reporting it, because if you don't have any problem showing what you use it for, then you shouldn't hide it. So the flip side of that is that when you understand that you have to be very adequate and transparent about reporting your results, you'll be very careful how you spend it in the first place. It's also about disclosure of all relevant information regarding the church financial dealings. It's about disclosure. Disclosure is very, very, very important. Disclosure of interest, and these things are common. they're not like they're not like novel subjects. I mean, disclosure is common in private organizations, for instance. If you have a member of a board, okay, in which the organization is trying to like, let's say the organization is trying to like procure something or give a contract to another organization to which a member of the board has an interest in, that member must disclose his interest. It's just common, governance, corporate governance, and all that, and it's then left to the board to be able to then weave the conflict of interest and say, okay, you know what, it's not a conflict, we're okay, we're okay with it. When there's full disclosure of all relevant information, it always creates a system of accountability. Full disclosure of accounting information, full disclosure of asset disposals. An organization will from time to time acquire and dispose of assets. You must be ready to be able to fully disclose, these assets disposals, how you got them, who you sold them to, and the amount to which there was, it was sold. If you're not comfortable in doing that, then probably it calls into question, why, the whole transaction in the first place. So financial accountability in a nutshell is about that. So who should CFBOs be accountable to? CFBOs are Christian financial, Christian faith-based organizations. Who are they accountable to? Now we know that we're all accountable to God. So that's not even in question. Everybody's accountable to God. But we're also accountable to members, to the members of the organization. Now we'll see later in this presentation why the members are important. We'll see that when you're registering this organization, you're registering it to be able to do certain things for the members. So the members are very, very, very important. So you are accountable to them. You are accountable to them. 2 Corinthians 8, verse 20 to 21. I mean, I quoted it earlier, where Paul was saying to the Macedonian church. Now, the Macedonian church was this church that they were known not to be very rich. So they gave out of their poverty, offerings to Paul. And Paul was particularly very, 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 he was particular about how they spend the money and about how they accounted for it. So Paul was talking and he was saying that we need to be able to avoid any criticisms of how, do we administer this gift. So we need to take pains to ensure that we are doing what is right, so that we're not just right in the eyes of God, but we're also right in the eyes of man. So at the end of the day, you're accountable not just to God, but you're accountable to your members, the ones to which they are giving their offering. So whether they are the rich ones or the poor ones or whatever, whether they are giving out of their riches or out of their lack, you are accountable to them. You're accountable as well to your leaders. You're accountable to the board of trustees. You're accountable to the leaders of the church. You're accountable to the deacons. You're accountable to all those people. You're accountable to your donors. You're accountable to those who are giving of their substance to you, with however big or however small. And you're accountable to state authorities, whether they are federal or they are state. You're accountable to them. So in Nigeria, for instance, you're accountable to the Federal Inland Revenue Service, and you're also accountable to the State Inland Revenue Service. I'm sure some people will be asking me, how is it that an NGO or a church is accountable to federal tax authority people? Yes, you are, because there are certain things that the federal authorities expect you to deduct from certain payments that you are making. For instance, withholding tax. A lot of the churches, for instance, are some of the most active in real estate construction. So if you're doing real estate, there's no how you will not engage a consultant. The consultant, there's no how you will not engage an architect. There's no how you will not engage a building engineer. There's no how you will not engage this. These people are professionals. They are contractors. Now, when you're giving them this job, okay, the law expects that you are the ones that will deduct the withholding tax that you're supposed to pay, that they are supposed to pay. And so the moment you withhold the withholding tax, you deduct it from their payment, you're supposed to remit. And when you remit, you're supposed to report. So understand that all these are layers of accountability that is required of us, of our organizations. If you have employees, for instance, while the church itself or the faith-based organization is exempted from tax, the employees are not exempted from paying tax. So when you give them their salaries, the law expects that you withhold the payee, that's their personal income tax, and you remit. If you remit, you must report. It's just this way it works. So then you're accountable to them as well. And then you're accountable to the CAC, because the CAC is the body that registers you. In fact, the CAC is very clear about it. If you are involved in any collection or you are involved in any subscription or whatever, you are required to make returns. It's the way it's supposed to work. Fine. So why is financial accountability important? I said earlier, because it's a requirement of the law. The law requires that where there are contributions, where there are collections, financial accounts must be kept. It must be audited, and it must be submitted. It must be reported. So you must submit your annual report, your annual returns to the CAC. So the CAC is interested in your financial statements, in the report of your activities on a yearly basis, and all those general information about you. I mean, the FIRS, for instance, is not interested in your activity. They just wanted to know, your tax returns in terms of specific taxes you're supposed to report on. And the same thing with the state authorities. So there are certain taxes that the state should report to the state, and there are certain taxes that must be reported to the federal authorities. You ought to know this. It's not a question of if you're supposed to pay. It's a question of what you're supposed to pay and what you're supposed to make returns. Your congregation deserves to know how their contributions are being spent. So if you raise an offering tomorrow for a particular building project, for instance, and you say, okay, you know what, we're going to do this facility, we're building this facility, maybe a particular hospital or a school or a brand new auditorium, you must be able to give account to the congregation, to your members, how that money was raised and how it was spent. Don't give this I don't know, this cover that you're only accountable to God. I mean, the money didn't drop from heaven. It came through donors who decided to obey God's instruction to be able to give to you. So you must be accountable to them. And finally, it helps the organizational leadership to know the financial status of the church. Knowing the financial status of the organization gives you an idea the financial wellness and the financial health of the organization and what it's needed to be able to move forward. So in a nutshell, really, that's what financial accountability is. Mrs. Bale will go deeper into the nitty-gritties of it. I don't want to go too much into that, so I'm just laying a foundation, and she will go into the deeper aspects of it in terms of talking about, financial records, the kind of accounting you should do, and all those bits and pieces. I'm just laying a foundation here. So the next thing I want to talk about is governance. Why is governance very, very important? Many people do not understand that the Bible itself is is a book of governance. In fact, the very first examples we can see of governance started from the Bible. So we know the story in Exodus 18 of how Moses was able to divide men into thousands and hundreds and all that kind of stuff, and then appointed heads over them. The bigger the organization gets, the more structured it will become. And the more structured it becomes, the more need for governance structures to be in place. And it is not for because we just want to be bureaucratic. It's just it helps us to be more organized. I mean, take for instance when I think that's in Acts chapter 6, when there was this dispute between certain Jews with others, and they were complaining that some of their widows were not being treated right and all that. And the disciples came together and said, look, we cannot leave the business of preaching the word and prayer and start serving tables. So let's appoint 7 deacons. And they gave the conditions. They must be men of repute. They must be men of, the spirit. They must be, they gave conditions. And they appointed them over the administrative distribution of food. That's governance. So we must understand that even the Bible itself, is a book built upon the need for governance, structure, and of order. All right. And so when we're talking about governance of the church, we're not talking about some kind of mystical something that doesn't exist. We're talking about something that we can actually share examples straight from the Bible. So what are the guiding principles for governance in a faith-based organization? Number one thing is that you must do a name search and reserve a name. Now it's important. I mean, as simple as this is, it's important for you to know, because issues of name, comparisons of name, can always show up later on in the organization. So you must also be able to know how you can change your name, adjust your name, or what are the procedures you need to be able to change names. So don't say, you know what, God gave me this name and I'm not going to change it or whatever. Sometimes you just need to be, you need to know what to do in terms of name change, because that name change in itself could be very, very critical, in how the organization is managed, in the future. Appointment of trustees. Now, I must say that the commission, the CAC, the tax regulators, that's the FIRS and the state revenue services, they don't know the pastor. They don't know the senior pastor. They don't know, in law, they don't know them. Okay? As far as they are concerned, they probably don't exist. Now, the people they know are the board of trustees. That's the people they know. Those are the people that have the fiduciary responsibilities over the organization. That's the people known to law. So when you're appointing your board of trustees, you need to be very careful. Okay? Don't go and form the board of trustees with yourself, your wife, your brother, your brother-in-law, your sister's husband, your sister, and all that. And then somewhere at the end of the day, go and have your infant son. It doesn't work that way. All right? Appoint a board that is very professional. In fact, the law itself gives you some kind of guidelines in the appointment of your board of trustees. I was looking at the list just before we started, and it says that qualification for trustees. A person shall not be qualified to be a trustee if the person is an infant, if the person is of unsound mind, having been found so by court, if the person is is undischarged, corrupt, if the person has been convicted of a crime, and then it goes on and on. You know, the idea really is that when you're appointing a trustee, you're appointing people of character, and you're appointing people that are professional, and you're appointing people of expertise in different things, you know. So, and you're appointing people that can look you in the face and tell you the truth. I'm not so sure that if you have your wife, your brother-in-law, and your sister, and your son in that place, those guys can actually look in your eye and tell you the truth. I doubt. You know, so try and, you know, appoint a board of people that you can really, really, really be sure that at any point in time they will tell you the truth. You know, so as much as possible, get a lawyer as a member of your board of trustees. Get an account, get a finance person, you know, as a member of the board of trustees. You know, get someone who has vast experience in terms of board, you know, the administration of boards. They help at any given point, you know, in time. Remember that they are the ones known to law. They are not you. It's not you, the person that the law knows. It's the board of trustees. Thirdly, be very, 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 very conscious about the preparation of the constitution. Now, this is what we realize with a lot of MBOs. They do not take cognizance of what is in their constitution. Now, your constitution, it contains the object of your organization. That is the objective of your organization. It's the constitution that says that, oh, you know what, this organization is focused on widows. Or it says, oh, you know what, this organization is focused on providing, you know, education for the less privileged. Or this organization is focused on, you know, preaching the gospel to places X, Y, Z. Do you understand what I'm saying? So it's your constitution that says that. And the unfortunate thing is that a lot of FBOs don't pay attention to the constitution. They don't read it. They probably just get a lawyer who goes to copy and paste from another church somewhere because he has helped that church to prepare their constitution and, you know, and got them registered. And then you just get a constitution and you don't know that in the analysis of your organization by the commission, it is your constitution they look at. So be involved in your constitution. Now, it is very, very possible that at the start of your organization, when you started, this was what you wanted to do, which was stated in your constitution. It is possible that 10 years after, you have evolved into doing something else. So it is important that you go back to the constitution and change that constitution. It's important that you do, but then there is a process to changing the constitution. There's a process. You don't just wake up in the morning and say, okay, you know what, I want to change the constitution. The Karma, you know, which we are very much aware, gives a process for the altering and the change of the constitution, and it must be by a resolution passed by a simple majority of its members and as approved by the commission. So before you can change your constitution as a faith-based organization, the law expects that you will come out and face the membership of your church, have what you call an annual general meeting or a general meeting or whatever you want to call it, and then you present the changes to them and get a 2/3 of an approval of it before you can submit it to the commission for change. So in a nutshell, pay attention to your constitution, and if you realize that you have moved beyond where your constitution is today, make attempts to change and alter and update that constitution with the CAC, because if you don't do so, it is grounds for deregistration of the organization. All right. What else is important? Guiding principles: register with the CAC as an incorporated trustees, prepare accounts in accordance with accounting standards for non-for-profit organizations. I like to add here, I'm happy to see that Wale Oluyemi is in the room. we're putting together a brand of accountants, a group of accountants, and they're going to be working very hard to come up with what we call a standardized model of accounting for FBOs, all right? That is standard with standard charts of account, in which case it is possible for FBOs to have prepared their accounts in the same form to make it easier not just to prepare their accounts but also to audit those accounts. We're going to be hearing more about that as we roll it out. Annual general meetings. I mean, I'm sure when I'm saying these things, some people are looking at me. I'm saying that what concerns church with an annual general meeting? I'm sorry, but the law requires that you have general meetings. Let me read a provision for you. There's a provision in the CAMA. In the old CAMA, it was section 599. I don't know which section it is in the new CAMA now. That talks about replacements and appointments of additional trustees. So you can actually replace and add to your trustees. It says where a body or association intends to replace some of its trustees or to appoint additional trustees, it may by resolution at a general meeting do so and in the prescribed and apply the prescribed form for the approval of the commission. It says that even before you as an FBO want to change your trustees, you must present the new trustees at a general meeting. So if you don't hear anything about governance that I'm saying right now, part of what I'm saying is that the days of you running your organization as if the members don't matter, it's not legal, because you have to get them in the picture. You have to make sure that certain decisions are approved by them. And you have to make sure that on the parts of the law, you are covered. So it goes back to what Paul said, that in the eyes of God and in the eyes of man, we are right. We are doing the right things that we need to do. And then finally, the filing of accounts and statutory returns. In terms of composition and selection of board of trustees, I think one of the points to be raised there is that while the law allows you to have one trustee, what we recommend is that you should have at least two, preferably four, because it gives you an opportunity to have a rich, robust conversation and debate within the board of trustees. So what are the responsibilities of the board of trustees? Remember, we said earlier that the board of trustees themselves are the key elements, the key people that the commission recognizes. So understand that they are to establish the core purpose of the organization. They are to ensure that the purpose of the organization is followed. The purpose of the organization is enshrined in the object of the organization, which is enshrined in the constitution of the organization. So the board of trustees, their work is to ensure that the organization is going according to purpose, because if they deviate from purpose, it is them, not the pastor, that the government or the law will hold. And so if anybody comes to you tomorrow and says, you know what, I like you, and I really love the way you, I love your leadership, and I want you to be a trustee, don't jump at that invitation. Sit down and think about it very, very well, because it requires you to be able to be involved. Because if anything goes wrong, then the funding in the direction of funds and in the direction of that organization, it is you that the law will hold responsible. Okay, so they're also responsible for the appointment of executive members and key personnel. So you're supposed to have a governing board, and that governing board is supposed to be, is supposed to manage that organization in the direction of its object. Also, it's responsible for pushing the best interest of stakeholders, achieving independence. It also pushing for financial oversight, checking the financial health, maintaining reserves, self-guarding investments and assets, and ensuring internal controls are followed. There is a requirement, in fact, a clause in the CAMA that talks about the fact that the organization, the non-profit organization, the incorporated trustees, okay, registered under incorporated trustees, cannot directly or indirectly transfer assets of the church or assets of the financial of the NBO to private ownership. Okay, so whether it be assets, cars, buildings, equipment, cash, because cash is a current asset. You cannot transfer it to private ownership because when you do so, it is illegal. All right, and part of the work of the trustees is to ensure that the assets of the organization is not transferred into private ownership. It also ensures to ensure compliance with policies, internal control policies. It also ensures that there are planning and there are budgets that needs to be approved. Okay, and ensure that there are regular meetings. Now let me wrap this up quickly so that I can allow Mrs. Barrett to go into the more technical part of the conversation. What are the important governance documents to be looked at? The Constitution. So I keep hammering on the Constitution, the Constitution, the Constitution, the Constitution. It's a very, very important governance document. So if you're a church leader today, if you have never looked at it before, please go back and look at that Constitution. And then ask yourself today that what's in that Constitution exactly what I'm doing today? If it is not, please organize a general meeting of your members. And you must have members, so you must need to have a members list. Organize a general meeting, form a quorum, and then do a modification of that and file it with the CAC so that what you're doing today aligns with your constitution. Okay, so you need operational manuals and a well-designed organogram. You must separate the spiritual aspects of the church from the administrative aspects of the church. All right, so you should have a CEO. Yes, you should have a CEO. Okay, if you don't have a CEO, you must have a COO, a Chief Operating Officer. All right, that manages the operational aspects of the organization. In the same way, the disciples said, you know what, we're not going to be bothered with serving tables, and leave the business of the word and prayer. In the same way, you have to separate the spiritual activity from the governance activity, from the administrative activity. Okay, have an organogram, have a structure, have a head of finance, head of legal, have a COO, that is managing all that and is reporting to the board of trustees. Have a documented succession plan. One way you can look at this is that for every position, every governing board position, sometimes don't just appoint people in perpetual tenures. Give them a contract, let that contract lapse in 2 years or 3 years or 4 years. The advantage there is that if there is a question of incompetence or a question of non-performance, all you need to do is not to renew the contract. So have a documented succession planning. There's nothing wrong with it, right? It's the way things are supposed to be designed, and the board of trustees is supposed to ensure this. Have a members register. If you don't already have this, organize it. Ensure that your members go through a membership registration process and they get membership identification. If donors give you money, please record the donorship. This idea that, oh, you know what, what do they call it now? Widow's mite. I don't understand. you need to be able to keep track of where your income is coming from. So if you have certain donors and they are giving you certain amounts of money, you need to be able to track it, because tomorrow, for instance, not just the donor, but you can have a regulatory agency write to you and say XYZ donated XY amount to you. Can you confirm, when you received it or not? If you don't have records of that, you could be, you could be culpable. You could be, they could say that, you are involved in some kind of money laundering scheme and things like that. So it's important to be able to keep records of that. Have a staff welfare policy, have an internal control policy, have an account a manual. Keep track of every single thing that is going on within the organization. Don't take certain things for granted. These are the key issues where we're looking at the subject matter of financial accounting, financial accountability, and governance. And when you focus on this, you basically have the foundation to be able to then build upon and have a very strong organization. So thank you very much. I will yield the rest of my time, if I've not overshot it already, to Mrs. Bale, who will go deeper into this. Thank you very much.
Thank you very much. Thank you for that insightful session. I believe people have a few questions already. During the Q&A session, we'll spend a little more time answering, whatever areas that needs clarification that we may have. So moving on, the remaining part of the session will be taken by Mrs. Margaret Bale. Mrs. Bale is a fellow of the Institute of Chartered Accountants, a fellow of the Chartered Institute of Taxation of Nigeria, and a seasoned investment banker. Our expertise spans over 3 decades of business management. She served as CFO of FBN Quest Funds, a private equity firm, for over a decade, where she and her team members resiliently helped organizations and project teams in the development and implementation of business strategies that support FBN Quest funds to a high profitable level. She later became the MD CEO of FBN Quest Capital Group, an investment bank, before she retired and started John Pear Consulting Limited, JPC. She also serves on the board of House Group, a special purpose vehicle for the promotion of integrated consulting solutions in the Middle East and Africa region. Margaret Bale is the managing partner of JPC, a company that has immense expertise in financial management and accounting, tax, compliance, and outsourcing services. Once again, can we please make welcome Mrs. Margaret Bale. You're welcome, ma'am.
Good afternoon, Pastor Sam. Good afternoon, Pastor Boye. Good afternoon, everybody. It's indeed a great opportunity to be here this afternoon to share my thoughts with everybody on the platform. Brother Inka, thank you very much for the insightful explanations you've given to us. After the extensive and the explicit explanation you've given, I just think I need to concur with everything you said and say, okay, everything is okay. I don't need to say anything. But I am mandated to talk this afternoon, so I will have to say something. Thank you very much for the good foundation you have laid for me. For Christian faith-based organizations, Christian faith-based organizations are not profit-making, but we have obligation to report to the government because we are registered with the government. Brother Yinka has already explained, we have obligations to report to our stakeholders, who are the church-going people, the donors, the people even watching us from outside, the public. We have obligations to report to them. And CAMA 2020, the part F of it, has emphasized more on the incorporation of faith-based organizations. Because of this, we must make sure we have a good reporting system. So what are we talking about this afternoon? What we're saying is we need to create an environment that will enable us to report seamlessly without any hassle. We need to create an environment that will make our reports to be reliable, to be dependable. And if anybody sees the report, they will know that we have really tried in being transparent and there is integrity in the report. If we have good reporting system, compliance will not be a difficult thing. So I'm going to start my discussion on controls. I will discuss control, financial oversight, and use of church resources and compliance. So I will start with controls. Why do we need control? In any organization, in any home, there should be control. Part of the management function is control. The first is planning, then organizing, control, and leading. So it's one of the 4 management functions. If we plan well, if we organize excellently, and we don't control, the leadership will not be in place as it ought to be. So there should be controls in various levels, in various departments and in various roles. There should be appropriate controls that should be put in place. And control is usually from top down. It's from the board of trustees to everyone. It will cascade from the board of trustees to the executive management, to the senior management, and to all other staff. And it is the responsibility of the board of trustees to have appropriate controls in place. Even though they may not, they are not, it's not that they may not, even though they are not to implement one by one, but it is the responsibility to make sure everything is in place. What does control do for us? It helps us to better define the organization's goals and objectives. If the organization goals and objectives are well known by the employees will run by it, and our resources will be focused on the organization goals. Brother Yinka emphasized on taking cognizance of what the Constitution says. That is the goals of the organization. So if we know our goals, we know how to set appropriate controls in place. When we set controls, we are safeguarding our assets and will not misuse our resources, and there will be no misappropriation in the system. Even if there are errors in the system, so far controls are in place, the errors will be corrected at the appropriate time, and necessary measures will be put in place for the errors not to be repeated. So controls help us to identify errors as early as possible and to put mitigation in place to prevent such errors again. When we have controls, there will be good recording, and it will help the management to look into the past. The church, the organization can say, what did we do last year? How did we do it? If there is no record, the organization may not know how well it has performed. Just in like profit-making organization, when you are doing appraisal of the performance of the organization, you compare period to period. Last year with this year, first quarter with second quarter, first quarter this year with first quarter last year, and so on. So it will help the management to look into the past and to see where corrective actions needs to be taken, where the organization has done well and what we need to do to improve. Controls regulates, it guides, and it protects the organization. If we have good control processes in place, there will not be any form of legal action against the organization as much as possible. Most organizations have financial policy as their control. It is much more than financial policy. There are a lot more. And not just is that controls in place. Most churches have. Some are very elaborate, some are not elaborate, some are written, some are not written. But any control that is in place that is not written will not be followed, will not be adhered to strictly. So all the controls we should have in place must be written controls, and it must be understood by everybody in charge of the roles the controls is targeted towards. Then we should know something. Brother Inka has said this, I don't need to emphasize too much on it. In a profit-making organization, it is normally stressed that the organization is a separate legal entity, different from its owners. And so the owner of any organization cannot just dip money into the account of the organization or into the purse of the organization to spend money. No. The owner of the organization should take salary. Even if the money is not available, accrual should be made for it so that you know that you have worked for so months and so amount is to be paid to you. So also in faith-based organization, the resources and funds of faith-based organization should be separated from the funders' resources. They are not the same thing. In the Bible, it is said that God detests dishonest scales. So if we give any report and it's not accurate, it will be termed as a dishonest scale. And so in Proverbs 11 verse 1, it is said that a false balance is an abomination to the Lord, but a just weight is his delight. So if we give incorrect report, not adequate report, but Annika is really stressing that our report should be accurate and complete. So the completeness and the accuracy of our report is very paramount to our integrity. There are controls to be put in place. Some are financial controls, some are non-financial controls. So I will discuss the non-financial controls now. Brother Inka has touched on many of them in the governance we discussed about, but controls should be passed down from the Board of Trustees, as I've already said. There should be policy on recruitment. There should be policy for the board. The pastors and the executives should be accountable. There should be a policy for this also. And there should be segregation of duties. In our procurement, there must be vendor approval process. How do we approve somebody that we want to buy from or an organization? It could be a tender process, or it could be by any other process, but there must be a policy for this. Brother Yinka also mentioned about the conflict of interest. There must be procedure for aparting conflict of interest. Then the number of signatures that are required on a particular document. You see a contract document or a bank document, there must be policy on the number of signatures required. And also part of the non-financial control is communication. Who should speak to the press? There should be a policy on this. Not just anybody in the church can stand up to go and face the press. There should be policy on this. These are controls. The financial controls that we have in place, anybody in finance must be very knowledgeable of what he or she is doing, so that there will be no error that will make us to look non-transparent. There should be a written accounting manual. The accounting manual should detail everything about how money is taken, where it is posted to, the different ledgers that we should have, the different heads, and when money comes in and goes out, how it should be treated. This should detail this extensively. Even our assets, how we should treat our assets, numbering the assets, taking record of the assets, and so on. There should be strict guidelines for collection and remission of offerings and donations. The offerings and donations we take from time to time, at what period is it remitted to the bank? How many days does it stay in the safe? What is the appropriate place to store the money? When the money is still in the church premises and it has not gone to the bank, is there an insurance cover for it? Money in transit, we call it money in transit. Is there an adequate insurance money cover for money in transit? Who are the signatories to the bank accounts? All this must be put in place. These are controls that must be put in place. Who is required to sign a purchase document? And where is our cash kept? Is there a budget? The board should have set a budget, and there should be appraisal of the budget often. The appraisal of the budget will be on a periodic basis. Some do it on a monthly basis, some on a quarterly basis, some on a yearly basis. But our budget must be appraised so that we don't overshoot the budget and we don't put the organization in a situation where it will be liquid, do not have money to carry out its day-to-day activities. Then insurance is very, very important. The organization's assets must be adequately insured. All of us will testify of what happened during NSAS protests. Many organizations' assets were destroyed. It is only the ones that registered, or only the ones that have insurances against this type of risk that will be compensated by insurance companies. So as a faith-based organization, we must have insurance. And this is part of the policy that the Board of Trustees must ensure is available in the church, so that if anything happens, we will not be accounted to be careless. Internal control. Most of the organizations don't have internal control. Internal control is very essential for all organizations, either small or big. It is the internal control people that we make sure that both the financial control policies and the non-financial control policies are strictly adhered to. And internal control people should report to the executive management with a dotted line report to the Board of Trustees, so that they will be independent in their day-to-day internal control of the organization. The Board of Trustees is expected to render stewardship to everybody that they need to render to, that is the stakeholders. So it is the Board of Trustees that is in charge of the financial oversight of any organization, of the faith-based organization. So there are so many things that they need to put in place. We have said it. And one of the functions of such leadership is financial oversight. How money comes in, how the money is spent. So the accounts department, or finance department as some people call it, they should have good record of every transaction, either small or big. There should be a good record of it. It is when you have a good record, then you have bookkeeping, good bookkeeping system. It is the good bookkeeping system that will flow into good financial reporting. So when we have good bookkeeping system, our financials will be okay. All documents must be filed appropriately. All the financial documents must be filed appropriately. Document and implement policies and procedures. We are not to say, oh, we know that this is what we need to do and we not document it. Anything not documented can be forgotten. So we need to document and implement the policies. Some people, some churches document, but they don't implement. Some implement, but there is no documentation. So there will be a lot of gaps here. And if there are gaps, it will be tending towards misappropriation. It will be tending towards lack of transparency. So everything must be well documented. But Annika has already touched on know your donors policy. This is very, very important so that there won't be issue of money laundering in our churches. There must be distinct approval levels. If the company, the organization rather, is to spend 200,000, who is to approve? The person that approve or the people that approve 200,000, do they have the authority to approve 500,000 spending? Do they have authority to approve 1 million? There should be policy guiding all this. Then for faith-based organizations, we have chart of accounts, very simple chart of accounts. The reporting system of faith-based organization or the accounting system is not as cumbersome as profit-making organization. But nevertheless, we still have charts of accounts that are very simple and easy to comply with. At the end of the period, we prepare accounts and we pay taxes. But Annika has already mentioned taxes. Pay as you earn taxes, payee. Every staff that works for a faith-based organization that earns salary there must pay tax. The tax will be deducted at the end of the month when the salary is going to be paid. And this has to be remitted to the appropriate authority, that is the Internal Revenue Service, either federal or state. Then we pay taxes on the money deducted from our contractors. If there's any commercial activity, we have to take withholding tax. If we engage in any commercial activity, we should charge VAT. We should take withholding tax as appropriate. Both VAT, that is value-added tax, and withholding tax do not belong to the organization. They both belong to the government, and they should be remitted as at when required. The appropriate dates for remittance of each of these is clearly stated, and Brother Yinka has touched on it in the previous lecture he gave. We can use accounting package, accounting software to prepare our accounts if it is available, or some use just Microsoft Excel. But either which way, the person preparing this account must be very knowledgeable. If it cannot be handled at the church level, this can be outsourced to any organization that is involved in this. There is no software that is adaptable to Nigeria's situation alone, but for every faith-based organization, it's almost the same all over the world. So we can use anyone that is available. Then the standard accounting process we must follow. We said if we are preparing our accounts, there must be source document, because if any regulator comes and they want to look into our books, they will not just look at the figures in the accounts, they will want to marry this to the source document. So the source document must be well kept. It must be kept for as long as the law allows, between 7 to 10 years. This must be kept. Federal Inland Revenue Service and even State Inland Revenue Service do go into organizations to do back duty assessments of taxes to be paid or not yet paid for 6 years. So any of these regulators can come to us and say they want to check our books in the last 5 years or for the last 5 years. So when we have our books intact, our records intact, and well kept, we don't have anything to fear. At the end of the period, say a monthly period, we perform end of the period processes and we prepare our accounts. So the account for January will be seen, the one for February will be seen, the one for March, and so on. Then we file our accounts and tax returns as at when due. We file our account at the end of the year. In non-profit making organizations, there are methods of accounting called fund accounting and restricted fund accounting. The fund accounting is a means of accounting for receipts and expenditure on a particular project. Let's assume we have a building, or we have building projects for children's church. The money donated towards that cause can be put in that account, that ledger head, as receipt, and every expense that relates to it will go to that account also. And at the end of the day, there will be a balancing off. The balancing off will give us either surplus or deficit. The surplus will be transferred to the general account. We also have restricted fund account method. If there is a donation or a grant that is given to a faith-based organization for strictly a particular goal, the restricted fund accounting is to be used for this. We only use the receipt, the money received for such projects, for that project and that project alone. At the end of the day, the expenses too will go into that account, inflow and outflow, and the balance on it will remain there. Some policies say the balance on restricted fund accounts should remain there for as long as possible. Some say after some years, it can be transferred to a general account. We should look at what our constitution says and what the donation is all about. For a profit-making organization, there is what is called, what they use, they can't use fund accounting. They use accrual method, whereby the income and expenditure of a particular period will be reported in that period. Take, for example, if there is a rent for 5 years, we rent our building for 5 years, and we pay 10 million for that building. 2 million ought to be for each year. For a profit-making organization, the 2 million will go to each year, and the remaining will be an asset yet to be utilized. It will go to the appropriate account. But for a faith-based organization, a non-profit making organization, all the 10 million paid for rent at the beginning of this year, which is meant for 5 years, can be expensed at once. If you buy a generator and the generator cost is about 5 million, it can be expensed at once, but this cannot be done in a profit-making organization. So the reporting of income and expenditure of a faith-based organization is very easy and simple, and it can be strictly followed. Here, I have examples of topics to be covered in accounting policies and procedural manual for organizations, faith-based organizations. Most churches have this already. We are just to remind ourselves. Like, the duties and responsibility of the following should be well spelled out. The treasurer, financial secretary, accounting team, finance team, trustees, and so on, the board of trustees. Internal controls, when is our year end? When are we to prepare our accounts? When are we to do our budget? Budget should not be when the year has ended. We should budget for next year, maybe 3 months before the year ended, and so on and so forth. Then what is our borrowing authority? Can anybody just go to the bank to borrow on behalf of the organization? No, there should be borrowing limits. Then the reserves of the organization. Some churches have reserves that can take them for as long as 2-3 years, even if there is no money coming in. So it is the responsibility of the board of the trustees Board of Trustees to determine appropriate reserve levels that will make the organization to run seamlessly in case there is an unforeseen contingency that they need to attend to. Then there should be receipt policy and so on and so forth. Then cash policy, how much cash should be called petty? What should be in our team? And how is the money in the petty cash ordered for? How is it disbursed? How is cash advance taken? When a cash is given to somebody to travel to, say, Abuja from Lagos, when he comes back, what is the minimum time in which he should retire? We should put this in policy. It could be 48 hours, it could be 72 hours, but this must be in the policy so that somebody that travels and has come back will not hold the money he has taken for 2 months without retiring. We should have internal processes also in our policy. The worship service offerings, how do we do it? When we collect money, is there a policy for those people that collect funds? How they collect it? Are they the people to count and record? There should be policy for the people that will count, the people that will record, and all the money that comes into the church. Some money comes into the church not during the service. Some come during the week. There should be policy for collection of such money that come just once in a while into the church. Then if you use debit or credit card, who is to hold the debit and credit or credit card? And what is the amount that can be spent on behalf of the organization? And who is to approve? These are part of the things we need to put in place. Our payroll. Payroll needs to be extensive. The amounts taken by each staff, the deductions to be taken, you take pay as you earn, that is the tax, you take insurance, there is pension to be paid by the staff, pension to be paid by the organization. The total is 18%. The staff is to pay 8%, the organization is to pay 10%. But if the organization so wishes, it can pay the whole 18% for the staff. But there must be deductions for this. And this must be well spread out in the manual or in the policies. Then budget. We've talked about budget. There should be budget for every spending in the church, either programs or for church worship and so on. Our bank statements should be well kept. There should be bank reconciliation from time to time so that we will be seen as being transparent. There should be church financial reports that the Board of Trustees must report on the financial condition of the church from time to time. Then governmental reports, we've talked about that, the reports to go to federal, to go to state, to go to CAC, and so on. Then our record retention time, 7 to 10 years. Then backing up of our financial computer. Nowadays, it is easy to back up in the cloud. We should not say we have lost our data because we are not able to back up. It is part of the responsibility of the Board of Trustees to make sure this is in place. And the people in charge must make sure we all have this. Then there is audit. Audit, the finance team will cooperate with the finance committee to ensure that everything that is required for audit is provided for the auditors when they come. And there should be appropriate forms for each of the spending, each of the expenditure. These forms can be completed on the phone without making it too cumbersome. Then it will be sent to the appropriate authorities and approvals will be given as at when required. I have here a sample of chart of account. I don't want to bore you, but the people that are in finance that are here would be a little interested in this. The chart of account is very simple for a faith-based organization. You have money in the bank, so there'll be a chart for bank, the cash you are holding, investment that must have been made, either savings or long-term investments, then our properties, then our assets, furniture and fittings, and so on. These are all in the balance sheet. And we have account payables, the money we will not get paid. Accrued expenses, we have all these. They are all in the balance sheet, and some of them are liabilities. So also we have income statement. What should be in our income statement? All our contributions, donations, and the interest we earn from investments. If the organization gets involved in any commercial activity, it must pay the appropriate tax. So if the organization invests, the organization must pay the appropriate tax on the interest received on the investments. So we have also sample reports for our income statement. Very easy. The contribution, the income statement, the money spent, the money received for workshops, for events, and so on and so forth, and the money bequeathed to the organization. We have records of this, and this is just the way it can be expressed in our income statement. Then all our expenses must be well classified. The administrative expenses will include our salaries and so on and so forth. After our account has been well prepared, audit will be done at the end of the year. The auditor will have been selected, and they have a period of 5 to 10 years within which they can be changed. But we must make sure that the auditor selected is very competent and is qualified to be our auditor. When the audit is signed, it is the responsibility of the board of directors to sign and to attest to the accuracy and completeness of the financial statement. If you look at the financial statement of profit-making organization, it is the board, the chairman, the secretary that will say, we attest to this financial statement. It gives the true and fair position. It states the true and fair position of the organization. So also in faith-based organization, our financial statement must be true, and the board of directors or board of trustees must be able to say, yes, it is accurate, it is complete, and there is disclosure as much as possible. Pastor Sam normally says something. If you have nothing to hide, you have no reason to hide. So, as faith-based organizations, if the regulators come to us to say, show your books, we don't need to hide anything, we don't need to be scared of anything. We are to show them our books. We are not mandated to publish our accounts, but when the regulators come to us and say, we want to look into your books, we should be happy to show them our books. They do this in advanced countries. They go into places, to churches, to check their accounts. In UK, they go into non-governmental organizations to check their accounts. And because records of those who have donated to the organization will have been kept, if those people are taxpayers, the government pays between 28 to 30% back to the organization that collects the money. That is in the UK. In the US, you may be allowed to have tax rebates. In Nigeria, what happens is that if you are an organization and you have donated to an organization that is approved under our own law, then such money may be tax exempt in the books of the organization. Resources of the church, how is it used? Do we ensure it complies with the way it should be used? It is expected that resources are used in a responsible manner. Brother Ika said it, you cannot have 40 million in your account, then you use 30 million out of it to buy a car for maybe the pastor. It is not a responsible manner in some cases. This includes managing assets, managing liabilities. Liabilities is borrowing money that does not belong, or things that do not belong to the organization. How do you manage it? How do you manage the assets? And this must be managed in a God-honoring way. giving regard to applicable legislations. Restricted funds, that is, I am discussing how we use our resources now. Restricted fund is part of the resources. It must be used for the restricted purposes. Compensation of workers. Our workers must be compensated reasonably and taxes paid. Our contractors must be paid as at when due. If you are using money for benevolence, all payment in support of the poor must be in the program and purpose of the organization. But Inka talked so much about the constitution. You can't just say you want to do this without it being your constitution. So check your constitution very well. If you are interested in donating to a particular organization or into a particular project, check your constitution. If it's not there, maybe you go and update your constitution with Corporate Affairs Commission. Then compliance. For us to be compliant, we need to have checklists in place for so many things. We've said this all along. From what Brother Yinka has said, there should be checklists. Checklists for the Board of Trustees. What is the size of the Board of Trustees? Is it appropriate? Are the trustees independent? Do they hold meetings as at when? How many meetings have they held? How is the Board of Trustees appointed? What is the retirement procedure? And do you do right filings with the regulators when the trustees is appointed or retired? Governance of up-to-date annual returns, spending activities, and annual audit. We need to safeguard we need to have safeguarding policy in place, insurance, safety, health, and environment policy must be in place. Every one of us know about COVID. When you go to churches now, you see signs, indications of what you should do. These are part of safety, health, and environmental policy. Also, the church building should be insured. And is our church registered for worship? When there's going to be alteration or improvement in the church building, do we have necessary permits? And so on and so forth. When we have all this in place, this will ensure that we have enabling environment. It is the enabling environment that will help us to get our records right, and our records that are right will help us in good financial system. So, in conclusion, to be blameless, we said integrity, honesty, and uprightness should be our watchword. Integrity, honesty, and uprightness should be the watchword of any faith-based organization, most especially Christian faith-based organization. We must ensure that we make the environment enabling for the workers, for everybody to be able to have proper financial reports. This is what we've been sharing since. We should render good stewardship as expected, not just by God, but by men. You don't need to say, God sees my heart, God knows what I am doing. If men do not know it, it does not stand as good stewardship. And Brother Anika has touched so much on this, 2 Corinthians chapter 8, verse 20, where Paul admonishes us that we don't want anyone suspecting us of taking one penny of their money for ourselves. That we should be as careful in our reputation with the public as in our reputation with God. With this, I submit to everybody. This is the end of my presentation. Thank you very much.
Thank you very much, ma'am. I just want to throw this to Brian Carr. Listening to you and listening to Mrs. Bale and all the things that you have shared, the controls, the governance system, and all the stuff that needs to be put in place. So for someone who has doesn't have any of this yet and is listening to, everything that we reeled out today, I think the first question that was going on in the person's mind is, where do I start? So that's, can you speak to that?
Fantastic question, Pastor Boy. And it's a reality that where most faith-based organizations are is not where they should be. Let me tell you what I mean. The reality is that a lot of faith-based organizations cannot even afford to have accountants paid monthly. Some of them cannot even afford to have auditors. It's not every church that is as rich as Daystar and Elevation and Co that can afford the likes of KPMG and PwC and all the rest. So it can be overwhelming. Okay, so don't mind my joke. I'm just trying to get at Pastor Sam very, very early on. But you see, the thing is this. Organizations can be helped, and that's what CFAA is all about. So what CFAA is trying to put together, okay, is a process where we can help member organizations develop their internal controls. We can help member organizations with already standardized templates of accounting, financial accounting templates. We can help organizations prepare their accounts by assigning to them accountants that can help them prepare their accounts on a monthly basis at a fraction of the cost. We can help them by getting them auditors that can do this audit for them at a fraction of the cost that it will cost them. That is why CFA is very, very important. And that's why if any one of them is listening to me right now, CFA is the organization you should work with. You should be a part of. Because you see, to do this by yourself is overwhelming. Number one, you need funds. Number two, you need the right personnel. If without the necessary funds, you might not be able to attract them. You need to be able to have the right amount of structure. So think about a smaller organization, for instance, that cannot set up a burdening. It doesn't see the need to set up a burdening board because it's not that big. It doesn't see the need to be able to, put structures in place to have policies that cover collection, approvals, lodging in banks, and all that. It could just be overwhelming. But these things are not that difficult. That's part of what we are saying. So in CFA, what we are working towards right now is to develop models that allow smaller faith-based organizations to be able to do these things at minimal cost. So we are actually starting a project very soon to which all these resources will be available for a CFA member. So if you're a CFA member, at some point next year, God willing, you'll be able to be provided with an accounting, a financial model. You'll be able to be provided with a financial template to prepare your account. You'll be able to be provided with model internal control policies that you can adapt immediately, generic policies that you can adapt. You'll be provided with processes that helps you to set up governance structures in your organization. And you'll be provided with actual physical support for preparing your accounts and auditing them. So yes, we recognize that this can be overwhelming, but in reality, we have the structure and the process to make this easier for smaller FBOs that can't afford, to do this at the scale to which the law requires them to do so.
Thank you very much, sir. Someone asked in the group chat, I've made wrongs, where do I start from? I think Brianka's explanation answers your question. Mrs. Bales, someone is asking, our church, which was registered last year, is being asked for our TIN. Is a registered church expected to pay any form of tax? Our banker is saying they will degrade our current account to savings of if we don't, savings one if we don't produce a TIN.
Okay, thank you, Pastor Boye. A faith-based organization is not expected to pay tax because it's a non-profit making organization. But in as much as it is registered with CAC, it has to register with the tax authorities. When you register with tax authority, you have a TIN. Banks are mandated to put TIN numbers on every current account. So if you have a current account with bank, they will expect you to put your TIN number. The mere fact that you have tax identification number does not mean you need to pay tax. But if you need to pay tax, it will go to under your tax identification, like the taxes you pay when you do commercial activities. We have to go to your TIN edge. So it is necessary you have it. Every faith-based organization should have TIN numbers. Just like every company, whether small or big, you must have TIN numbers. As soon as you are registered, and it is very easy to register with Federal Inland Revenue Service and Lagos State Inland Revenue Service. It's very easy. Just go to their portal and you register.
Thank you very much, Ma. I'm still staying with you. This next one says, from Ezekiel Adele, says, thank you, Mrs. Bale, for your presentation, Ma. My CFBO incorporated a company to handle all business activities. If 4 vehicles were purchased by the company and donated to the 4 pastors in the CFBO, is the donation tax allowed?
So his own faith-based organization registered a company for business.
Yeah.
Okay, and they bought 4 cars and gave to the pastors of the faith-based organization. First of all, the registered business company is a separate legal entity from the faith-based organization. So it must account for its own taxes separately. Whether it is allowed or not, the tax authority should be able to determine whether the donation you made to the church is allowed. Do you have it as one of your objectives of the organization that you will be working with this church? If the church is not under what is recognized as institutions that you can donate to, I think it may be disallowed. But I may not have a full answer on this. You just need to know that the organization you donate to, does it qualify for this? The mere fact that you are a faith-based organization in Nigeria does not mean you are qualified to, that an organization is qualified to donate to you and it will be tax exempt. So we need to get this clear.
Thank you, Ma. Brian, quickly to you. Someone is asking, Olufemi Orose is asking, how do you handle volunteers who draw some allowances on a regular basis for a defined period with respect to pay and or withholding tax? Brian.
Okay, all right. That's an interesting question, really, because they are especially for NGOs, they are volunteers who get some payments and co regularly. It really boils down to how the payment is classified. Usually, I know that for most volunteers, it is the payments to them are not classified as income. they are classified as some kind of either refund of expenses, or they are classified as they're classified as gifts. So gifts either to assist in for their feeding or for their transport or things like that. So it is not necessarily seen it's not classified as an income. It's more like classified as refund of expenses or provision for them to sort out certain expenses, whether it is already incurred or not. So I think it's down to the way it is classified. If it is classified as an income, then it will attract at some point an income tax. I mean, that's I don't know if Mrs. Bale agrees with me.
Yes, the thing that can be done in this is the people that are volunteers and they take stipends from time to time, it's just for you to reimburse their transportation, so to say. So if it is like a reimbursable expenses, you don't need to take taxes from it. But if it is a constant thing that they take and is regular, you can either turn them as contractors, of which you will take 5% or 7.5% now, you charge them part that you pay to the government, or you just make it reimbursable expenses like for transportation, because a volunteer will come to you, he will take transport to you, will take transport back, and the money you pay may not be much more than the one that can cover that. So it doesn't have to pass through taxation as much as possible, provided the reimbursement is reasonable and is totally accurate and transparent.
Thank you, Ma. Veronica, I'll read this question to you, then I'll go to Pastor Godman, and then, when it's done, we'll come back to you. But I think this question may require a little bit of reflection before you provide an answer. And it's about constitutional amendments and trustees. This was sent in by Abraham Adedeji. He says, I am a trustee member in a ministry founded by my wife, who is also a member of trustee. I am the resident pastor. The third member is my cousin who had left the church for another. How can we replace the trustee member that has left? That's the first question. Secondly, what must I do to be replaced as a trustee member? Thirdly, how do we guide against the issue of a board member leaving for another church? Then there's an added question on withholding tax. Are we to deduct withholding tax like carpenters, plumbers, and electricians? I hope you got the question, sir. So I'll go to Pastor Godman, and then we'll come back. Godman, so as a senior pastor, how do you set a standard of accountability within your organization? Would you care to share your experience?
Thank you, Pastor Boy. Well, as a senior pastor, how do you set an example, a model of accountability? I think it's more about making up your mind to be able to answer the question, what kind of organization do I want to run? What kind of organization do I want to run? Whether it's for profit or not for profit, you have in both sectors, you have organizations that are accountable and you have the ones that are not accountable. And the moment you are able to answer that question to say, I want to run an organization that is accountable, that is open and transparent and wants to obey the rules, then with that decision that you have made, you trust God for grace, because sometimes if you don't deal with your individual ego and trust God and believe that the church or the NGO or the faith-based organization is not yours, and it's not your business. So the people in business, they have more tendency to have a sense of ownership, which they should have, and that sense of ownership is more intoxicating. And some pastors share the same mindset of ownership, and that's why it's also more intoxicating. So when you see the balance sheet of a church, or the balance in the account of a church, that's not your money. It shouldn't even affect how you see yourself. You should only check your own account balance, and then if you want to feel rich based on how much you have. And it's also, shows that pastors and ministers must think about sometimes how to be above board, and how to trust God for their own personal needs to be met. So and then we model it by bringing other people in to either how financial decisions are made or how the decisions are executed, and who sits around managing the finances of the organization. From the get-go, one of the things I learned in ministry generally from Pastor Sam, obviously, is the openness and accountability with which you run the church. The pastor and his wife must not be the only ones who sign, the checks. Back in the day, we used to do a lot of signing of check. Today, it's about levels of control on the online platform. Yeah, the levels of control on the online platform. A pastor should not be the only one that has the sign-on, log-on details for church account, has the token. If you use the token system, or and all that, and you're the only one who can move money from the account. The moment you start to behave like that, you are not open to accountability. There has to be other people that are trustworthy enough, who can log on to the church account, who can make transfers as approved. And then you would then put control systems in place where if there's anything that is transferred beyond what is approved, there's a way it can be, it can be flagged and things like that. So when that is in place, then the pastor is able to focus on leading the church spiritually and all that, preaching and teaching of God's word, catering to the sheep. But when the load of how the finance of the church, the financial operations of the church is done, is also on the pastor, it takes something away. So that's what I do, and I recommend that people should run churches and faith-based organization, faith-based not-for-profit, not as their own business, but as a stewardship, because the money that comes in is money from the general public that we collect on behalf of God, and we cannot manage it alone. There has to be other people in the mix. And the moment you bring other people in the mix, then there's a need for openness and accountability.
Thank you very much. Thank you, Pastor Godman. Brian Kat, are you good to go on the question?
Yes, I am. Yes, I am.
Okay, please go ahead.
Yes, I am, Pastor. Go ahead. Okay, so my first recommendation to the person who asked the question is that as much as possible, I think you need to reconstitute your board of trustees. Because if I heard you right, you said you are on the board of trustees, your wife is there, your cousin is there. All right. So I don't know the number of people in the board of trustees, but if already you, your wife, your cousin are on that board of trustees, even though there's no provision of the law that says that you cannot constitute your board of trustees there, it brings a question of transparency and governance. Yeah, it just throws it up, and all that. So I would recommend that as much as possible, try and reconstitute it, and remove anybody there that can make it look like this is not an independent board of trustees. That's one. Secondly, there's no provision in the law that says that your board of trustee members, your board of trustee must be a member of the church. There's none. However, because of the role of the board of trustees, you know, because of what they have to do, because of what they have to approve, because of the policies they have to do, it's always very difficult for somebody who is not a member of that organization to be on the board. So, you know, because if you go through the CAMA, there's no provision there that says a board of trustee member must be a member of the association. I mean, I stand to be corrected, but I've not seen that. However, because of the requirements of the responsibility that the commission places on the board of trustee member, it is always better to have someone who is a member of the church and who has some oversight. In an ideal situation, maybe you want to have a good mix of people who are members of the church and maybe one or two who are not members. It just gives an independent view, and it also allows for some level of fresh eyes to see things from a different perspective. Because you can see that if people are members of organization, they might not see well, you know, because they are there. But and if you have somebody from outside looking in, they have a different perspective to see. But there's no requirement, as far as I'm concerned, that says that a board of trustee member must be a member of the church. So what do you need to do to replace a board of trustee? The provision of CAMA says that where a body or association intends to replace some or all its trustees or to appoint additional trustees, it may by resolution at a general meeting do so. All right, so the expectation is that you have a general meeting of the members of the organization. So that brings up a question: who are the members of the organization? How do you ascribe membership to them? So that already assumes that there's a process in your organization where you ascribe membership to people. So if you don't have that process already, put that process in place. You know, that process has to be in place, and ensure that, you know, you can then call on those people to at the general meeting to approve of new trustees or replacement of trustees. I know some churches who deliberately, you know, report a small number of people, of members, just so as to can get around issues like this. I don't know, you know, legally you can get around that, yes, but you have to make a decision by yourself whether you want to recognize your members in terms of their financial commitment or not. As far as I'm concerned, if there are people within your church that are consistent financial members, and when I say financial members, they're giving their offerings, they're giving their tithes monthly to you or regularly to you, they are almost by default your members, and you have to recognize them in one form or the other. So what the law requires is that you need it made by resolution at the general meeting. So a resolution needs to be raised, and that resolution needs to be approved. And then thereafter, you apply to the commission, and then the commission will assent to that application and then update your trustees on its portal. The last question has to do with withholding tax, whether, you know, we should be paying carpenters. Am I right, Pastor Boy?
Yes. Are we to deduct withholding tax on repair jobs given to artisans like carpenters and plumbers and electricians? Let me quickly add another one to that is a bit related. It says professionals for the building were engaged at the cost, transportation and refreshment. Should withholding tax still be deducted on their stipend? So I think the response will deal with both.
Yeah. The expectation is that you are deducting withholding tax from consultants that you have a contract with. So there has to be a contract, and there has to be, and that contract, you know, contains terms and conditions and all that, because usually what happens is that when that process is audited, they always ask for the contract. So that brings the subject of materiality. So is it material? So if I'm paying an artisan 20,000 naira for a job that they are doing, it really is not material. And I would probably not go into the details of signing up a contract for that. That will probably fall under petty cash payments. So the principle of materiality applies here, and the level of contract that you have with these people concerned. I know of organizations, private organizations, that you cannot work with them regardless of whether you are an artisan or not if you don't have a TIN number. And the reason is because they know that they will be audited by FIRS or by the state revenue services. And if they see any payments to anybody, they will flag it. But usually the payments that are flagged are the payments that are material. And the payments that when you see the figure, you just pause and look at it again, rather than a smaller figure. So I think materiality is very important. If you're talking about artisans and you're just, paying for repairs and all that, I'm not so sure that, you should bother yourself with that. But if you have a contract with any consultant, and usually when you engage a consultant, you're supposed to have a contract with that consultant. So it's part of the policies we are saying. You cannot engage a consultant on the fly, just on the fact that I like to engage a consultant, I just engage a consultant. No, you engage a consultant on the basis of a contract you have with that consultant, and on that basis, you're expected to withhold certain parts of what you're paying to that consultant, and remit to the government. So, should you? I think the question is if the consultant is something about cost of what? I didn't get the second question.
It's related to the issue of people who have been engaged and they are given transportation and refreshment. I guess they're given stipends. So the question was, should withholding tax be deducted on stipends? I think you've provided.
I don't think so.
That. Thank you so much. So Mrs. Bale, let me drop this with you, then I'll go to Pastor Godman, and then we'll come back to you. It says many churches have their account details freely available, and people often make donations and giving by direct transfers and USSD codes. Many of such transactions do not have enough information to identify the donors. Given these limitations, how will churches implement donor identification? So I'd like you to just get your thoughts on that question. I'll move to Pastor Goldman. So it says, how do I get my GO to embrace financial accounting and accountability? Our church is about 19 years old now. We still don't have a board of trustees, need a bank account. Anytime I raise the issue because I work in a financial institution, and I understand how financial accounting can help grow our financial base and also motivate people to do it. But if frown at it,
should I give me a response?
Okay. I sell this idea to him without making him feel I am doubting him or interested in the finance of the church?
Well, it's a very dicey situation, and I'll say that especially for churches that have been existing and they have been used to a certain way of doing things, and the leaders of the church or GO, as the case may be, also have their, the conscience of the leader is no longer pricked because there's a certain way, and they do not think that God frowns at such ways, and everything truly may actually have been done well in the integrity of the man's heart. Maybe nobody's misappropriating funds. It's just that they don't have record, they don't have, trustee, they don't have any board or anything, and the man is the Alpha and the Omega of the finances and the administration of the church. Having said that, in terms of conscience, the man may be okay, but in the eyes of the law, that is not acceptable. So I feel that the person who wrote this should either talk to one or two more people in church who have the same, who are as enlightened as he is, and they have the moral standing and justification. They are committed, you know, they are stakeholders in that ministry who can sit and have a meeting. And then in the light of, you know, government regulation, karma, you know, just good corporate governance and what is expected and everything is learned from here and all that, then table everything, maybe a short presentation or something. It doesn't have to be a PowerPoint presentation, but presentation based on these issues are here, and it will be good for us as a church. It's not about the pastor, it's about the church. You know, sometimes when you go to make this kind of presentation and you're talking about what the person is not doing right, you may meet a brick wall. But if you go from the point of view of how can we position our church to be the kind of church that government will never have any issue with, the CAC or KAMA can never come after us, the tax authorities cannot come and seal us up, you know, and all that. If we come from that point of view, the man can see a reason to say it's the church itself that we want to restructure and make and create the right structure for and make accountable. And in the midst of all that, so far his interest is not illegal or corrupt, his interest will be protected. So maybe the man does not even know that he should be on a salary and not just take whatever he wants. No, it's not to say, look, how much do you want to earn? And then let's agree. So you see what you are earning is just that church money will now be different from from your own money and stuff like that. So if they don't come like, Pastor, you are doing the wrong thing, Pastor, because you can be genuinely wrong. Let me just put it that way. So maybe the man's conscience is clear. It's not, it's not overdoing anything, So in that case, it has to be this church's legacy must be protected. We don't want a situation where one day government will come after us or the regulatory authorities will come after us. Let's put this in place. This is now what is appropriate. And I hope that if you go that route, the man may eventually listen. Yeah.
Thank you, Pastor Goldman. So, Mrs. Bale, we'd like to hear your thoughts on the question on identifying donors as regards, the varied electronic means of giving that we now have.
Okay, I think we have to have a roundtable talk about this and reason together. Because people use ESSD, you are not able to identify the payer. The church must be sensitized as to the reason why we need to know our donors. The answer may not be gotten in 1 month or 2 months, but as much as possible, make everybody to register, and the church may not generate codes for people so that whenever you are transferring money, you can put a code there. We know that code 001 belongs to Pastor Boye. So whenever we see anything code 001, it is Pastor Boye that contributed. It could be another thing that we devise, because the USSD does not identify who has paid. You can't go to the bank and know who has paid into your account. And even if you say you want to go to the bank, it will be very, very cumbersome. So we need to sensitize the church, our members, and whoever comes to be members of the church and to fill appropriate forms. Also, the church has the responsibility to be confidential. Some people do not want to reveal their identity because confidentiality has been played with. And you see some people contribute in church. Before they leave the church, you see 3, 4, 5 people by the car of that person to say, I need money. So the confidentiality should be taken very, very seriously by the church authority. But people need to be sensitized generally. And maybe we use TIN number, but even if people use TIN number, they are not going to get any rebate as at today in Nigeria. So people may not be interested in quoting their TIN numbers, but people have to be sensitized.
Thank you so much, Ma. Thank you for that response. Someone is asking, should lead pastors be part of BOT? If lead pastors are part of the BOT, is their allowance or stipend taxable? We dealt extensively on that in our last webinar in October. The link is available. The resources are available on our website. We'll give you the details before we go. Brian, someone is asking, should a church have a balance sheet or statement of financial position? Should a church have a balance sheet or statement of financial position? And also, if I can just add to that, earlier during your session, you spoke about, having, preferably having 4 members of the board. Should it be an even number or an odd number board in case of where you have deadlock in decision and you need a tiebreaker? What would you say about that?
Okay, so the law allows you to have one board of trustees if you want, but as much as possible, you should have at least 2. We recommend that you have at least you have like 4. So and so it's really not a it's really not a question of whether you have even or odd membership. It's not a question of whether you have even or odd membership. It's the quality of the membership that matters, and so you want to make sure that you have people within the board that are professionals that can engage the church, that in the important conversations of the day, that can implement policies, and they can sign off on accounts as well. So it's not the quality, it's not the quantity, it's the quality that I will be more concerned with. I mean, they're not. I can't see anywhere in the law where they are talking about board of trustee members voting. So if it is if those requirements are there, that's when I will think that the quantity of membership will be important, whether they are odd or even.
Okay.
But I think what you should be concerned about is the quality of the membership rather than the quantity of it. The other question, should a church have a balance sheet or statement of financial position? It's basically the same thing. So unless I don't understand this question.
Yeah, that was how the person stated it. I guess maybe the person is trying to ask if a church should have their financial books intact, which is basically all we have been discussing in this session this evening.
No, but the question is asking is a technical question, because a statement of financial position is what is, in other words, is also known as balance sheet. You understand? So it's the same thing. Should a church have a statement of balance, financial position? It's not a question of should a church have a statement of financial position or balance sheet, because it's the same thing.
Okay.
So if he's asking whether a church should have a statement of financial position, the answer is yes, you must have it. It's one of the financial documents you are expected to prepare as a faith-based organization registered under CAMA.
Thank you, everyone. This is as far as we can go today. We still have a number of questions that were dropped in the group chat and the question and answers box. big thank you to our facilitators today, Mr. Inka Ogunbi and Mrs. Margaret Bale. Thank you for sharing with us from your wealth of experience. God bless you tremendously in Jesus' name. Pastor Godman, over to you.
All right, thank you everyone for staying with us to the end. I see that quite a number of people are still here, staying to the end, and we appreciate that. We believe that the webinar has been very educating, and we've been able to get a lot of useful knowledge with which we should be able to run our organizations better. For the people who are asking about how to join Sifa, I will recommend that you get on the website, sifa.org, and find out. I mean, the information is there, how you can register to be a part of Sifa. And when you register, you get a provisional. Okay, and there's a slide that is being displayed right now, with which, you know, it's just bit.ly/join Sifa Nigeria. If you just copy that, and you can send it to your friends too. If you register, you get a provisional membership, and in the course of next year, we're going to let you know how you substantiate your membership by coming up to speed with certain compliance level. And like Mr. Ogunobi had said, there are certain provisions that will make available next year where you can be, you know, we can hold your hands through going through some compliance level, and based on the policies of Sifa, which we will publish next year, on what it would take to be a full member, how you can get provisional membership, full membership, and all that. Then with that, you will know all the things that you have to do. Because people who are joining us for the first time today, there are many webinars that we've had in the course of this year, which are part of you know, the prerequisite to getting full membership. You will still have to go through those webinars. So those webinars are available on the website, on our YouTube page, and when the time comes, we'll take you to some quiz. I mean, some kind of quiz with which we will know whether you have been able to go through those other webinars. And we thank God for Mr. Agunobi and Mrs. Bale for the heart that God has given them to be able to make vital contributions to the work of Sifa. Thank you for the delivery of today. We appreciate you greatly, and we pray that God will continue to bless your businesses and careers in Jesus' name. And as we go into next year, especially in the area of financial accountability, we are going to be leveraging the expertise on the issue of, you know, chart of accounts and other regulatory issues that we have to take members through. For everyone on the platform, all chartered church leaders and all that, I really want to appreciate you on behalf of Pastor Sam, and we trust God that as we prepare ourselves to represent Christ well, God himself will perfect all that concerns us, our churches, and the body of Christ in this nation in general. So thank you everyone for taking our time to be a part of the webinar. And again, I want to appreciate our facilitators, Mrs. Bale, Mr. Agunobi. Thank you very much. God bless you. Let's share a word of prayer, and then Pastor Boye will lead us. Just tell us a few more things before we go. Let's pray. Our Father, we thank you for the opportunity to gather together for this webinar. We thank you for the information that we have received. We receive grace over us to be able to run with this information. Our desire is that you empower us to be blameless according to your word. And we ask for wisdom for all church leaders. We ask for wisdom for everyone on the platform today. We ask that you lead and guide us into being doers of these instructions, so that we can model the right thing in our society today. We pray for your son and your daughter that you have used today to present. We ask that you continue to bless the work of their hand and cause them to have new testimonies even as the water, your word says, he that waters shall be watered back also. We ask that you water them back and cause your blessing to rest upon their households in Jesus' precious name. We thank you, everlasting Father. We ask that you take all the glory and all the praise in Jesus'
Amen.
name. Amen.
Amen. Thank you, Pastor Godman. Thank you, everyone. I just want to say a big thank you to the members of the webinar planning team. They always work in the background. Thank you for doing a great job. Ayo Bankole, Daria Ganga, Philip Raji, Sheon Ladokun, Sheye Oshode, Antoye Shobande. Thank you for the wonderful work that you guys do in the background. This is our last webinar for the year. We'll kick off again in January. We'll send the details of how to access the materials for this session and all the previous sessions to you. Some of us had complaints about the registration form. We're going to look into it right away, and then we'll send an update to everyone to go try it out again. So thank you for being a part of our session. God bless you. We hope to see you again in January, and we trust that this end of the year will be the best for you and your ministry and your organization in the mighty name of Jesus. Thank you very much. Bye for now.